If you're retired or close to retirement, stop what you're doing, because what I'm about to share could save you thousands of dollars, or cost you everything if you ignore it. Trump just signed a sweeping new tax law, and buried inside it are changes that directly target how retirees are taxed on Social Security, retirement withdrawals, and investment income. Most seniors have no idea this is coming. Here's what's alarming: the IRS isn't going to send you a warning letter. Your financial advisor may not even have caught up with these changes yet. And if you're making the same tax moves you made last year, you could be walking straight into a penalty trap. I've broken down every major change that affects retirees, in plain English, no confusing jargon, so you know exactly where you stand and what to do next. The seniors who act fast will protect their income. The ones who wait, they risk losing benefits they've worked decades to earn. You deserve to keep every dollar you've earned in retirement. If this matters to you, smash that like button right now, and let's dive in. So let's talk about what's really going on here, because this isn't just political noise. This is real legislation that has real consequences for real people, and if you're living on a fixed income, drawing from your 401k, collecting Social Security, or simply trying to make your retirement savings last, this affects you directly. Now, before we get into the details, I want you to understand something. I'm not here to scare you. I'm here to inform you, because knowledge is the most powerful financial tool you have. The seniors who come out ahead during times like these aren't the ones with the most money. They're the ones who stay informed, ask the right questions, and take action while there's still time to act. And that's exactly what we're going to help you do today. Let's start at the beginning. Over the past several months, Congress has been working on what many are calling the most significant overhaul of the U.S. tax code in years. And when a tax law changes, especially one of this magnitude, it doesn't just affect corporations or wealthy investors. It trickles all the way down to everyday Americans, and quite frankly, it hits retirees the hardest. Here's why. Retirees are largely living on fixed, predictable income streams: Social Security, pension checks, retirement account withdrawals, maybe some dividend income from investments. When the rules around how that income is taxed suddenly change, there's very little room to adjust. You can't just go get a raise. You can't pick up extra shifts. Your income is what it is, and now the government is changing how much of it they're going to take. Let's talk about Social Security first, because this is the one that hits closest to home for most of you watching. Right now, depending on your combined income, which the IRS calls your provisional income, anywhere from 0 to 85% of your Social Security benefits can be taxed. That's always been the rule. But what this new legislation does is change the thresholds and the way that provisional income is calculated. What that means in plain English is this: some of you who were previously below the threshold and weren't paying taxes on your Social Security may now find yourselves just above the new line. And once you cross that line, suddenly a portion of that monthly check, the check you paid into your entire working life, becomes taxable income. That feels like a betrayal to a lot of people, and honestly, it's hard to argue with that feeling. You did everything right. You worked, you contributed, you planned, and now the rules are changing on you in the fourth quarter of the game. Now here's where it gets even more complicated, and I really need you to stay with me on this part because it's important. Many retirees rely heavily on required minimum distributions, or RMDs, from their traditional IRAs and 401k plans. The new tax law has made adjustments to how RMDs interact with your overall tax picture. Previously, there were certain strategies you could use to manage the timing and amount of your distributions in a way that kept your taxable income lower and helped you avoid things like higher Medicare premiums or increased taxation of your Social Security. Some of those strategies have now been limited or changed. And if you're not working with a financial advisor who's up to speed on the new rules, there's a real chance you could be pulling money out in a way that costs you far more in taxes than it needs to. The IRS doesn't give you a do-over on this. Once that distribution is taken, it's done. The tax bill is coming, ready or not. And speaking of Medicare, let's spend a few minutes here because this is one of the most overlooked consequences of tax law changes for seniors. Most people don't realize that your Medicare Part B and Part D premiums are not fixed. They're based on your income from 2 years prior. So if your taxable income goes up this year, even by a relatively small amount due to the new tax law changes, you could find yourself paying significantly higher Medicare premiums in the future. This is called IRMAA, the Income-Related Monthly Adjustment Amount, and it affects more seniors every year. We're talking potentially hundreds of extra dollars per month in Medicare costs, simply because your income crossed a certain threshold. And here's the cruel irony, your income may not have actually increased in a meaningful way. The new tax law may simply be reclassifying or recalculating income you've always had, pushing you over a line you were safely under before. That's not a raise. That's a tax trap. And it's one that catches a lot of good, hardworking, responsible people completely off guard. Now let's talk about something that doesn't get nearly enough attention, and that's the impact of this new legislation on retirees who are still doing a little work on the side. Maybe you're consulting in your old field. Maybe you're doing some part-time work to stay active and supplement your income. Maybe you have a small home-based business. That income is going to be affected by the new tax law in ways that could either hurt you or, if you play it right, actually help you. There are new provisions around deductions for self-employed individuals that are changing under this legislation. Some deductions are being expanded. Others are being phased out. The key here is understanding which category you fall into and adjusting your approach accordingly. Because a small strategic change, like timing when you invoice clients or how you structure certain business expenses, can make a meaningful difference in your end-of-year tax bill. This isn't about doing anything shady or complicated. It's just about being smart and intentional with information you now have. Let's also talk about investment income, because for many retirees, dividends and capital gains from investment accounts represent a significant piece of their financial picture. The new tax law has made some changes to the capital gains tax structure that could affect how you're thinking about selling investments or rebalancing your portfolio. If you've been sitting on appreciated assets, stocks, real estate, mutual funds, and you've been waiting for the right time to sell, you need to factor in these new rules before you make any moves. In some cases, selling now under the current structure might actually be to your advantage. In other cases, waiting might save you money. But here's the thing, you can't make that decision wisely without understanding the new landscape. And that's true whether you manage your own investments or work with a financial professional. Either way, this conversation needs to happen now, not after you've already made the transaction. And this brings me to something I feel really strongly about, and I want to say it clearly. One of the biggest mistakes retirees make, and I see this all the time, is assuming that because they've always filed their taxes a certain way, they can just keep doing the same thing year after year. Tax law is not static. It changes. And every time it changes, there are winners and losers. The winners are the people who paid attention, got the right advice, and adjusted their strategy. The losers, and I hate to use that word, but it's accurate, are the people who assumed nothing had changed and found out too late that it had. Please don't let that be you. Please. You have worked too hard and sacrificed too much to lose money because of something that was entirely preventable. Now, I want to acknowledge something, because I know many of you watching are thinking about this not just for yourselves, but for your families. Maybe you have a spouse who depends on your retirement income. Maybe you're thinking about what you want to leave behind for your children or grandchildren. Estate planning and inheritance rules are also being touched by this new legislation, and if you have any kind of plan in place, a will, a trust, a beneficiary designation on an IRA, it is absolutely worth a conversation with an estate attorney or financial planner to make sure your plan still works the way you intended under the new law. Rules around inherited IRAs in particular have already gone through significant changes in recent years, and the latest round of legislation adds another layer of complexity. Your heirs could end up with a very different tax situation than you planned for if you don't revisit this. And that matters, because for many of us, what we leave behind is part of our legacy, part of what gives our years of hard work meaning. I also want to take a moment to speak directly to those of you who might be feeling overwhelmed right now. Maybe you're watching this and thinking, this is too much. I don't understand all of this. I don't know where to even start. And I want to say to you, that feeling is completely valid, and it does not mean you're behind or that you've already missed the boat. It means you're human, and this stuff is genuinely complicated. But here is what I know for certain, doing nothing is not a neutral choice. Doing nothing, when the rules have changed, is actually a choice to accept whatever outcome the new rules deliver, whether that outcome is good for you or not. And you deserve better than that. You deserve to be in the driver's seat of your own financial life. So if you're feeling overwhelmed, the answer isn't to shut down. The answer is to start with one step. One conversation. One phone call to a tax professional or financial advisor who knows about these changes. One afternoon spent reviewing your income sources and how they're currently being taxed. One step. That's all it takes to begin. Because here's the truth that I really want to leave you with. The people who are going to come through this period of tax change in the best shape are not necessarily the wealthiest people or the most financially sophisticated people. They're the people who chose to stay engaged. The people who refused to stick their heads in the sand. The people who watched videos like this one, asked questions, and took action, even when it felt uncomfortable or unfamiliar. That can be you. That should be you. Because you have put in the years. You have done the work. You have earned your retirement, every single dollar of it. And you absolutely deserve to protect it. So here's what I want you to do after this video ends. First, if you haven't already done so this year, sit down and do a tax projection. Don't wait until it's time to file. Do it now, while there's still time to make strategic adjustments. Second, if you work with a financial advisor or accountant, schedule a call specifically about how these new changes affect your situation. Don't assume they've already reached out to you with updates. Be proactive. Ask the question. Push for the conversation. Third, share this video with someone you love who is also in or near retirement. Because the more people in your circle who are informed, the better off your entire family will be. Knowledge shared is power multiplied. And one final thing, this tax law is not the last word. Congress will make more changes. The rules will continue to evolve. The seniors who consistently come out ahead are the ones who stay plugged in, keep learning, and treat their financial health with the same seriousness they treat their physical health. You would never skip a doctor's appointment for something important. Please don't skip the financial conversations that are just as critical to your well-being. You've got this. And we're going to keep bringing you the information you need to stay ahead, right here, on this channel. So make sure you're subscribed, hit that notification bell so you never miss an update, and if this video gave you value today, that like button is waiting for you. It helps us reach more seniors who need this information, and it means the world to us. Now let's keep watching, because we're just getting started. And that, my friends, is the full picture. We've covered a lot of ground today, and I want to take a moment to let it all sink in, because what we talked about in this video isn't just information. It's a roadmap. It's a set of tools that you can take with you, right now, and begin using to protect the retirement you've worked so incredibly hard to build. Let me bring it all back together one more time, because I want to make sure nothing gets lost. The new tax law is real. The changes are significant. And the impact on retirees, on people exactly like you, is not something that's coming someday down the road. It's happening right now, in this tax year, with your income, your Social Security, your retirement accounts, and your Medicare premiums. The clock is ticking, and the seniors who move first are the ones who will have the most options available to them. Options to adjust. Options to protect. Options to preserve every dollar they've rightfully earned. We talked about Social Security, and how the shifting thresholds around provisional income could pull more of your monthly benefit into taxable territory, even if your lifestyle hasn't changed at all. That's not fair, and it's not something you should have to just accept without understanding it. Now you do understand it. And that understanding gives you power. We talked about required minimum distributions and how the changes in this legislation affect the strategies that many retirees have relied on for years to keep their taxable income manageable. If you've been using a thoughtful distribution strategy, or if you've been meaning to put one in place, now is the time to revisit that with fresh eyes and updated information. Don't let the new rules catch you mid-strategy without a plan. We talked about Medicare and the very real possibility that a change in your taxable income, even a modest one caused entirely by shifting tax rules and not by any increase in your actual wealth, could trigger higher premiums under IRMAA. Hundreds of extra dollars a month. That's real money. That's grocery money. That's medicine money. That's money that belongs in your pocket, not lost to a system that penalizes you for crossing an invisible line you didn't even know had moved. We talked about investment income, capital gains, and the importance of revisiting any plans you have around selling assets or rebalancing your portfolio in light of the updated rules. Timing matters. Strategy matters. And the information you now have puts you in a far better position to make those decisions wisely and confidently. We talked about the self-employed retirees, the part-timers, the consultants, the small business owners, who have a unique opportunity right now to use the changes in deduction rules to their advantage, if they approach it with intention and the right guidance. And we talked about legacy, about the people you love, the inheritance plans you've made, the beneficiary designation sitting on file somewhere that may not behave the way you expect them to under the new law. That conversation with an estate attorney or financial planner isn't just about protecting yourself. It's about honoring every promise you've made to the people who matter most to you. I want to pause here and just say something from the heart. I know that for many of you, retirement isn't just a financial state. It's an emotional one. It represents decades of discipline. Of getting up early and staying late. Of making sacrifices, vacations not taken, luxuries passed on, choices made in favor of the future rather than the present. Your retirement is not just a number in an account. It is the living proof of a life lived with intention and responsibility. And you deserve to have someone in your corner fighting for it. That's what this channel is here to do. Every single video. Every single time. Now, I also want to speak to the caregivers and family members who might be watching this video on behalf of a parent, a grandparent, a spouse, or a loved one who may not be as comfortable navigating this kind of information on their own. You are doing something incredibly valuable right now. The fact that you're here, paying attention, absorbing this information so that you can help protect someone you love, that is one of the most meaningful things a person can do. Please share this video with them. Sit down and watch it together if you can. Have the conversation. Because sometimes the greatest gift you can give someone isn't something you buy. It's something you do. And showing up for someone's financial security in a moment like this is a gift that genuinely lasts. For those of you who are feeling motivated right now, good. Hold on to that feeling and do something with it today. Not tomorrow. Not next week. Today. Because motivation has a shelf life, and the window for making smart adjustments before this tax year closes is not infinite. Here's a simple place to start. Pull out your most recent tax return. Look at your total income, your Social Security income, your taxable income, and what you paid. Then ask yourself, given everything you learned today, does this picture look different now? Do you have questions you didn't have before? Those questions are worth gold. Write them down. Bring them to a professional. Demand answers. You are absolutely entitled to understand your own financial situation in full. And if you don't currently have a tax professional or financial advisor you trust, please make finding one a priority. Not all advisors are created equal, and not all of them are up to speed on the latest legislative changes. When you reach out, ask them directly, are you familiar with the new tax law changes affecting retirees? How do you see this impacting clients in my situation? Their answer will tell you very quickly whether they're the right person to guide you through this moment. You want someone who is proactive, current, and genuinely invested in your outcome, not someone who just fills out forms once a year and sends you a bill. This channel exists because we believe deeply that seniors deserve access to clear, honest, timely financial information, without the jargon, without the condescension, and without any hidden agenda. Every video we create is built around one simple question: what do retirees actually need to know right now, and how do we explain it in a way that empowers them to act? That's our mission. That's our promise to you. And we take it seriously every single time we hit record. So if you haven't already subscribed to this channel, please do it right now. It's free, it takes 2 seconds, and it means that every time we release a new video, whether it's about Social Security updates, Medicare changes, retirement account strategies, or the latest shifts in tax law, you'll be among the first to know. Hit that subscribe button and then hit the notification bell right next to it, so YouTube actually shows you our content when it goes live. The algorithm doesn't always do us any favors, so that bell is genuinely important. And if this video gave you something valuable today, if it clarified something that was confusing, if it motivated you to have a conversation you'd been putting off, if it simply made you feel a little more informed and a little less alone in navigating all of this, then please give it a thumbs up. That like button is one of the most powerful ways you can support this channel and help us reach more seniors who need this information. Every like tells YouTube that this content matters, and every share puts it in front of someone who might desperately need to see it. Leave a comment below and tell us, what part of today's video was most helpful for you? What questions do you still have? What topics would you like us to cover next? We read every comment. We take your feedback seriously. And many of our future videos are born directly from the questions and concerns you share with us right here in this community. This isn't a one-way broadcast. This is a conversation. And your voice matters in it. You came here today because you cared enough about your future to show up and pay attention. That already puts you ahead. That already says something powerful about who you are and what you value. Now take that same energy and carry it forward, into a phone call, into a meeting, into a decision, into a conversation with someone you love. Let today be the day things shifted for you. Let this be the video you look back on and say, that's when I stopped leaving my retirement to chance and started taking real control. Thank you for watching. Thank you for trusting us with your time and your attention. We don't take that lightly, not for a single second. Take care of yourselves, take care of each other, and we will see you in the next one.